Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with the weekly recap for this week. Finally, we are finishing the month of August and starting September. So, we are going to review the monthly performance on the Nasdaq index. And for the week, we are going to review all these fundamentals and also the big tech companies along with dollar yields and the amount of stocks that are above the 200 moving average, because we will find certainly a lot of interesting things that will affect the performance in the upcoming weeks and months. So stay tuned, because this video is going to provide you a lot of details regarding this week's performance along with the forecast for next week. First, as always, we are going to perform the fundamental review and then on the technical analysis from top to bottom, including the August performance, monthly performance of the Nasdaq. First, we are going to review the fundamentals. This week we had on Tuesday, the big day. We started the week quite surprisingly going crazy on Tuesday due to the jobs openings came in way lower than expected. We were expecting 9.4 million and we got 8.8 million. This showed signs of job openings going lower, means that basically the offering of new jobs, of vacancies, are going lower. So the workers, the potential workers, have less options to increase on wage and salaries. So they have to really adapt to less openings, less vacancies. And right now they were quite comfortable because they were asking, requesting on those vacancies higher salaries. So inflation was going higher. These jobs openings going lower means that they don't have that benefit right now. They have to adjust to the new vacancies, and the wage pressure and salaries are going to be lower. As I was saying, jobs openings was quite good for the week. We started Tuesday quite crazy. We are going to review that on the Nasdaq, huge boost to the upside. And on Wednesday, we got the GDP growth. This is an estimate, remember, estimate for the second quarter over quarter. The previous one was 2%. We were expecting going higher and we were going lower. A little bit higher than the 2%, but basically still growth. Remember that Jerome Powell said that growth means potentially monetary policy tightening. So if we start growing again, means that the economy is not slowing down. The Fed will have to continue increasing rates. So GDP growth estimate, let's see what happens with the final numbers. Thursday, we got the PCE price index and personal income. The core PCE price index came basically aligned with the expectations, the same as the 0.2 on the previous one. But the bad thing was not the income that was lower, so less income means less money to spend, but the spending was the bad thing for Wednesday. 0.8 really showing and increasing for the 0.5. We were expecting a slightly increase, but 0.8 definitely push that even higher. So the sentiment started going lower on Thursday, and on Friday we got a choppy Wednesday, choppy Thursday, but going lower. And Friday finally we really sold off because non-farm payrolls came way higher than the previous one, 157. We were expecting an increase higher, but this was certainly really bad for the market. And the surprise, unemployment rate came way higher than expected. This is certainly, I think, it's quite decent moving forward. Fed expects 4+% in unemployment rate, but this took the markets by surprise, 3.8, and that coupled with the fact that NFPs were quite higher and ISM manufacturing PMI basically came a little bit higher. So the pressure is still there. The payrolls are still there. The spending is still there. The growth is still there. The PCE is, I think this was a lackluster. This was adjusted as expectations, but if this PCE were to be lower, that maybe would have changed certain things. But on the week, we certainly have a bearish approach, and the markets really started to feel the pain. So let's move now to the charts, because we are going to start on the, as I was saying, the Nasdaq from top to bottom. This is the Nasdaq monthly chart. So basically, we had this month, August is usually quite a weak performance, but we certainly had a nice performance. Red candle, but bottoming candle. But this doesn't show you the complete picture. We have to go lower on the weeklies and the daily charts to really see the potential. It's certainly, I think nobody can ignore the fact that we are pushing these weeks into this bottoming candle towards December 2021 highs, and this is certainly something that we have to pay attention. But if we start going lower from the monthly, we start seeing weakness. Why? Basically, this is the weekly. The weekly was really pushing higher. We were seeing this descending 3 weeks in a row, seeing the pullback, and finally the buyers appeared and we are pushing higher. But this is still looking decent. The only thing that concerns me is when we go to the daily, and we are going right now to the current contract on the Nasdaq futures, we certainly are seeing these kind of things in this situation. We have the descending resistance, we have this pivot structure, and all this is just confluence. And this kind of candle in this level at this spot is certainly something you have to worry about. We can, of course, we can squeeze this topping tail, but in terms of logical expectations, I think this will start a move lower towards some point into this kind of structure between 15,200, this bullion pattern looking towards this kind of wedge and higher low. This is the zone for next week expectations. We are going to refine that in the 30-minute chart and the 1-hour chart. But certainly we have quite a decent August, better than expected, at least in my opinion. But I think we have to start thinking about a pullback. And if we go to the 1-hour chart, we had this was Tuesday. Let me just adjust this, not the SP. Yeah. So we have to really adjust. This was Tuesday. This is Monday. So this is the last 5 days. This was Monday chopping. This was the huge day on Tuesday, and we then started chopping around in this area. One of the things that we have to take into account is this look above and failed, and then we are at the lower part of in the middle of the structure, but certainly we can expect a little bit of pullback. This is the movement that I expect, and for sure we have to take into consideration this support at 15,380, because if we start doing these kind of things and rejecting here, certainly we can see a move lower towards this structure, this support, and this thin structure that certainly will provide a lot of volatility. On the 30-minute chart, we can see that this blue area, I think it's certainly a zone with a lot of momentum and volatility that we got on the move on Tuesday. But I think an expectation rejecting higher pricing and look below for a pullback and a higher low on the daily is one of the things that I would expect for the Nasdaq to do in the upcoming days. So that's the forecast. We are strong, but I'm certainly expecting a pullback due to this zone and the kind of candle that we got on the daily on the last day of the week. Rejection, we can certainly squeeze, but adjust your expectations and prepare for a possible pullback. That's regarding the Nasdaq. Let's now review all the big tech companies, the big 7 companies on the daily chart. A quick review. Apple is squeezing this initial gap that we are certainly pushing towards the upside. There's a small gap left behind, and if we check the 1 minute chart, we are pushing towards that. We've been quite strong throughout all the week since the squeeze on Tuesday. We were moving higher and higher and higher and higher. Certainly the momentum is slowing, but we are seeing a lot of push towards this gap fill on the daily. So I don't know if it's going to completely fill the gap, because this kind of candle is quite concerning, but I think 191 aiding this level is certainly a big level to see for a pullback. And we have to, at that point, we have to really think about this structure to be held in 187. So Apple completing a really nice week and pushing the gap fill. Microsoft is not at the same spot. We had the Nvidia day with the big rejection, this huge and quite bearish candle. We are squeezing higher, but I think this level still provides a lot of resistance ahead, and it's right in the middle of the level. So I don't know that there's just no expectations from my side. It's just to see price action and to see these levels, to really see the range. Tesla completed a nice week consolidation, but big rejection on the last day of the week. So we are still at this level, at this level between 255 and 240. And I think we can certainly start looking to things like this, continue chopping, and finally go higher at the final push towards 270. But there's again a lot of structure towards the downside, and the gap is just, I think, is right now currently still too far away to push for that. Amazon consumer discretionary, big push on the week. We started quite nice, moving towards the descending resistance that we got here, quite obvious. We pushed that, and on the last day we are holding basically this spot. But I mean, it's quite interesting that we have to hold this 137 level if we want to see some kind of push towards the highs of year to date, 143, and August 2022 145 level. So Amazon, quite interesting to see if we see continuation to the breakout in this descending resistance. Google is even more interesting because we have this level of April, this gap fill that we have since that year, April 2022. We have to really watch for these gaps to fill, because these are key levels that everyone is watching. We have the Nvidia day and we are squishing. We squeezed all the week. And let me tell you, Google was quite a nice performance. But at the end of the day, look at Friday. So we might see continuation to the downside, but this blue line, the daily level, is just completely important to hold 136. Nvidia, the big one. Nvidia is a beast. I'm sure you are aware of what it did. The first rejection, second rejection, lower, and then going higher on news, and then the big day. But sorry about that. But Let me explain you this level, the previous all-time highs now holding. I mean, we might see again a double push towards this area of all-time high 500. I still think with this structure at this level is still a magnet. That's what I think. And finally, Meta. Meta is quite tricky because we have these two bottoming tails. We have this overhead resistance, and we are right there. We are right there. It's certainly we are pushing towards ascending triangle. We have also, sorry, we have that possible resistance, descending resistance, and we have to watch because if Amazon, if Google, Meta start pushing, maybe Apple, Microsoft, and Tesla will continue, and the Nasdaq will push really strong. So now that we review the Nasdaq overall performance, the independent big tech companies, it's time to focus on the things that may look bearish. And the first thing that I always review is dollar and yields performance. Look at the dollar. Let me zoom out a little bit more. So this is the way in which we are right now. The dollar rejected this area of resistance. We pull lower and look at these two candles. Thursday and Friday, after the NFP, unemployment rate, and all the economic data, we just squeezed higher. And we are pressuring again this clear level of 104. And if we reclaim that, basically it's just a push, sending triangle into squeeze higher. That is certainly something that might happen. And if we start pushing towards 105, the thing that I'm waiting for, look at this huge push higher. This is not something that comes out of nowhere. There's some people buying dollar, and this will certainly pressure stocks down. Certainly. The 2-year yield found out that basically, look at this, we are still trying to hold support. This is something, a nuance, a detail that the most experienced traders will look at for continuous push towards higher pricing, towards 5%, and more pain to come. So dollar pushing, yields buying buyers, the 2-year yield and the 10-year yield is also buying buyers. Look at this last day after the pullback from the highs of June 2008. So yields have something in the background that maybe you are not aware, but I'm going to review that right now. In yesterday's video, I already talked about that. It's the inverted yield curve. If you don't know how this works, I recommend to just watch yesterday's video. And right now, I just want to reiterate the fact that we are seeing these higher lows towards this structure. And look at these 4 days. Performance in the week on the inverted yield curve really push the sentiment higher. The technical analysis here right now is just to push towards what was the previous resistance. Previous support is now overhead resistance. But this level is one key level area to watch. If we start pushing higher and higher and higher, and we continue inverting the inversion towards basically zero, if we continue doing that, I mean, there's more pain to come, because the issue is not that we are down here. The issue is when we really push towards the zero line and we delete, we remove, we stop being inverted, because then something is broken. The economy is sick, and the markets certainly will feel the pain at that point. So dollar, yields, and the relationship between them in the inverted yield curve is something that you have to really be aware. Not if you are day trading, but for sure 100% if you are investing or swing trading. The other thing that I think is quite interesting to see is financials. It's a big part of the S&P. Banks are quite delicate right now. They are changing the governance, they are changing the rules and the policies for the deposits, and some rules to avoid what happened on the SVB failure. Since then, we've been continuing seeing signs of recovery. We've not completely recovered at this zone, but we are still seeing this clear ascending trend that XLF at some point is going to push higher to really recover from the SVB crisis, and this is good for the markets. So if you want to really feel that the economy is achieving the soft landing, XLF is one of the sector funds financials that you have to really follow up. And apart from that, I think metals, gold, copper, and silver is the last thing I would like to talk about. Worldwide economy. How are we dealing with all the crisis in China? So we still have this descending. This is one spot, second and third one. This support down here is worth mentioning for sure, and I think gold is prepared to see again 2000. We rejected here, but I think we are on the move higher for 2000. Gold loves lower interest rates, and at some point Fed will achieve the terminal rate, and next year at some point, perhaps in May or June, they will start cutting rates, and gold is going to push really higher because lower interest rates is really good for gold. So gold is coupled and has a lot of correlations with interest rates. So seeing this push higher means that the discussion regarding terminal rate is really approaching the end of the tunnel. On the other hand, copper, it's coupled with the fact that copper is really used in a lot of spots on the supply chain worldwide for the economy. And look at this, rejection going lower. We are not yet out of the woods when talking about China, Japan, Russia, Europe. Regarding worldwide economy, we are not seeing that recovery from China and that demand that everyone is waiting for. Silver is also seeing a lot of rejection up here, but we are still up here, rejecting that level. But those two, copper and silver, are really volatile. Gold is more clear, and I think gold is better to really see the push higher, or the stock markets to also try to smell the lower interest rates. But that's a double-edged sword, because I think Nasdaq seeing lower interest rates is not as good as for gold. Gold is a commodity. Nasdaq is based on stocks, and I think for stocks and the forward P/E ratios and the upcoming earnings for lower interest rates and the possible not soft landing, Nasdaq is not the same for lower interest rates. Gold is really something. Last thing, now is the last thing. Are you aware of crude oil right now? Because crude oil right now is really concerning. I think crude oil it's the elephant in the room. No one, or at least on the media, no one is talking about this. But look at this performance. This was 1, 2, 3, 4, 5, 6, 7 straight days going to the upside, squeezing higher. And since July, in which we were down here, we were just pushing higher and higher. Pullback, big structure, pushing higher. We got a nice pullback, but at the end of the day, this is the last move. We are at $86 per barrel on crude oil. Are you aware of how this is going to affect at upcoming CPIs? Because this is going to be insane for the markets. Markets are going to feel the pain. Stock markets are going to feel the pain if CPI gets affected again by crude oil. I'm not talking about the manipulation of crude oil and production cuts from the OPEC Plus. I'm talking just about price action. higher, and this is not just one move higher. We are really seeing a huge move in since July, August, and now September. 3 months with unbelievable performance in crude oil. So let me just take a quick. Since the start of July, we are at 27% of performance on crude oil. This is going to destroy the expectations of lower inflation. So be really aware of this, because this is the elephant in the room. And oh boy, this is going to be awful for the outlook in September and October. If the stock market is just waiting for lower CPI numbers, this is going to be key to understand that this will not happen. This is not going to happen. So I think that's all. We covered a lot of things. We covered the Nasdaq index from top to bottom. We covered in the big 7 companies, the big 10 companies. We covered dollar yields, the inverted yield curve for you to be aware of interest rates. We covered metals, financials, and we covered energy. So you have all the tools in this video to really prepare for next week. Remember that Monday, it's Labor Day, markets are closed. So short week starting on Tuesday. Be really aware of the context, the fundamentals, and what other markets are doing. Review this video in a couple of times, because I think I'm already putting a lot of information for you to take decisions. My decision is to prepare for a pullback and to watch some markets to really see traps that you are not seeing on stock markets or equity markets. You are seeing some of that bearish action in other markets that Nasdaq is trying to push. So that is, be careful with the FOMO and be smart. Watch other markets, not only the tech, because tech sometimes is just covered on hype, AI, and all those things, and you really lose the lose sight of how the economy is doing and how the markets are behaving. So I hope you found a lot of information, helpful information in this video. This video has everything I think for you to prepare for next week. So if you found it useful, please give it a like, subscribe to the channel, because I upload videos every single day. And now for every weekend, you have this summary, these highlights for you to be prepared and acknowledge and understanding all the movements in the markets that I not trade, but I follow. I trade some of these markets, but I watch all of this information, because that provides you a lot of insight and details for you to be the best prepared. Remember that discipline, risk management, patience are skills that are really needed for this career. Be smart, be patient, enjoy the rest of the weekend, and see you on Tuesday. Stay safe, everyone.